Right, let me know if you can hear me, guys, and we'll get cracking. Hope everyone had a good weekend and we're all fresh and ready to start a new week. Great stuff. I'm going to share the screen. Okay, guys, let me know if you get any technical issues. As always, send through your questions. And let's get going. So, I don't know if you guys picked up on the weekend coverage. I sent a watch list creation out just before the Open or around the Open, in fact, early Asia on Sunday or Monday Asia, and we went through the board of pairs which everyone seems to have an interest in, and starting with the week ahead, key drivers. Essentially, the market's going to be in anticipation of the Jackson Hole. Um, that starts, I believe, on Thursday, and we're expecting a speech from Powell on Friday, and the markets will be focused on what Powell has to say. Um, the the presumption is that no decision is going to be made until the policy meeting, so there won't be any announcements with regards to monetary policy. We're waiting for the September 1920 FOMC meeting for that. Um, but given that the Fed is in data dependency mode, his opening speech on Friday morning will likely underscore the Fed's commitment to meeting the 2% inflation target. So it's likely to be balanced, but leaning hawkish in that respect. Um, Now, ahead of Powell's speaking, there are several Fed speakers this week. Um, Tuesday and Thursday, I think, are going to be the bulk of those. So keep our ears to the ground for Tuesday and Thursday Fed speak. In terms of actual data, we won't get anything until later in the week from the US with PMIs around manufacturing and services. They will be important data for us to monitor on Thursday. We've got a few bits and bobs coming out of the Eurozone, and UK as well, with PMIs. So keeping an eye on those. The 23rd of August, and then we've got New Zealand retail sales, but the Reserve Bank of New Zealand has already said that they're going to not pay too much attention to the volatility in data there, and they're happy with where rates are. So I'm not sure that'll have a major impact unless it was really, uh, really out of whack of what is expected. Right, so that's essentially the main data event. So um, we're essentially free this week, pretty much, to trade as normal. There are, besides Friday and maybe Thursday, there don't appear to be anything on the calendar that we need to be particularly uh, aware of. So in the US session, at least. So I think the main driver then, for the dollar at least, will be yields. And we talked about this with Yohei uh, last Friday. We had a meeting, which some of you may have been attending. Um, and there was talk of yields rising towards 5%. Um, Fundamentally, there are good arguments for that, and technically as well on the longer term time frames. Just nearer term, I'm wondering, however, if we're not going to get a correction in the 10 and 2-year yields. Um, and that will be important for this week to see how that pans out. So let's just take this to a less muddy chart. On the daily chart, we've got this W formation. These are reversion patterns, and at some point, we'd expect the price to uh, be drawn back towards the neckline of that formation. That's on the 10-year, and that's the daily chart. And then over to the 2-year, we've also got this harmonic pattern. I think that's on a weekly formation. So we've got that weekly chart, deceleration that's occurring up in resistance. So I'm just acknowledging that and in anticipation of a pullback. Where does that leave the dollar? Well, it too has had a move up. It too is meeting resistance, and it could be showing signs today at the start of the week. See how we end up today. Could be a first red day in a series of green days. My charts I have different colored candles, but so we have an opposing candle in the making, and that could be setting us up for a move lower. And that's something I was talking about in that video yesterday, and we discussed it on Friday at the end of the Friday session. We're looking for a correction in the US dollar to fuel um, opportunities elsewhere across the board. So let's keep an eye on that. So that's on the weekly chart. So I got that wrong. Apologies. That's the weekly chart, but also we're seeing the same today. So if we do see that daily close to the downside, that would be encouraging for our bias, bearish dollar. And this could be a scenario where we drift lower ahead of the Jackson Hole, leveling out this bullish run. The 38.2 is a target on the downside in that respect. And I was just having a quick glance across the board. Then the yen has been the mover, by the looks of things, the biggest mover. It's got a sharp move up, and that is born out of the divergence between the Bank of Japan, Fed, Bank of England, and the European Central Bank, but not to a lesser degree. But still, we're seeing weakness in the Japanese yen across the board. If you look at these, euro yen has really shot up, and the sterling yen as well. Now, in this regard, then, what we'd be looking for are retracements and then continuations. So for our session ahead, um, in fact, I put out a video on the weekend in the education section, um, and we could test it out today, in fact, on these pairs, because this is somewhat the perfect environment for such a strategy. But I mean, in Discord, where's the? Hold on, give me 1 second. I'll stick the link if anyone's interested in the video and watching it. Um, I've called it Strategy X. Just pulling it up. Um, I was being asked last week for a swing trading strategy. This can be used for swing trading as well as day trading. Swing trading, you'd use it on the weekly and daily charts. On the day, you can use it. I've just popped it in the chat there. You can use it on the hourly and 15. So on the hourly chart, what you're looking for is a break of structure, which is what we've seen, an impulse, which is what we've seen, and then you want to see a retracement. And essentially, you're looking to buy the dip and ride the continuation. And the rules are mechanical, um, and the video will explain it in depth, but we can just apply it here to today's market, considering it's occurring within our session and it could be an opportunity for the day ahead. What we're looking for at this point is a pullback, and we want a 38.2 retracement of the impulse. So you measure the impulse with the Fibonacci tool. We'll get interested when we get a pullback into the 38.2, so 185.70. So we can just stick our alarm for a pullback to 185.70 on the hourly time frame. So once that triggers, that's our cue to go down to the 15-minute chart. And what we're monitoring for is for that pullback to come in. We want it to be relatively steady. Okay, so pulling back nice and easy into our target area, and then to decelerate, come up, break some structure on the inside, pull back and rally. Right? So what we'll be doing is we'll be using rules. We'll have the 10 EMA, the 10 EMA, excuse me, cross below the 20 EMA. Then we want to see the 10 EMA cross up the 20 EMA. When it does that, that is giving us our environment to start looking for long. So the price would at that point be in this area, roundabouts, in this stage of the schematic. It will be in a bullish environment. And the additional rule is that MACD, the MACD, that blue line, you can barely see it probably. There you go. You can see it now. That MACD, that blue line, needs to be above the zero line. Okay, so you need those all of those criteria met, and then that will be your cue for looking for an entry. Um, so anyway, so without going too in depth in that strategy, the video is in the link if you guys want to check it out. But I'll monitor this today and I'll give an update and see if it works out. But we'll keep an eye on that. So we're moving on. It's better for me. Okay, so another one that's standing out to me this morning was gold. So we've got a scenario here where the dollar is selling off this morning. Right, this is something that we were talking about. We're looking for, correct? So this US dollar is showing signs that we could close lower on the day, and we're starting to move in towards the downside. So we've been looking for this for quite some time. Um, and that gives us a cue for gold. So gold closed on depending where you look. Let's go over to a different broker because we've got a bullish close on Friday. It was also an inside day, and we were talking about in the weekend in yesterday's watch list. We're looking for a move up into the 50, 61.8, 78.6 this week. Now, in order for that to happen, we need to get onto the backside of this bearish trend. All right, and we need to break above Friday's high. And what we were talking about is that there are going to be stops at these swing points here, over here, over here, up here, and they all have confluences with the Fibonacci scale. 50% mean reversion, and then the Fibonacci ratios above. So that's a thesis, and then the 38.2 obviously in that region as well. So we won't leave out that one. Maybe that could be our target for the day ahead. Now, inside days generally have stops either side of the range, and lo and behold, Asia came down into those stops, which fueled the move up. So far, we've been capped by Friday's point of control, that orange line, acting as resistance. So we'll just highlight that. So that's acting as resistance currently. We've had the pullback, the coil, the accelerated move out of the coil, and that could eventuate in a continuation to the upside for the US session. So keeping an eye on that, but I think that should be high up on our watch list for a move higher. So we've got the peak formation, railroad tracks, break of structure, pullback, holding, coiled, stop, pump below the lows, that pin bar there, engulfment, and this is on the hourly chart, and then prospects of a continuation to the upside. So also noting the day count that it's a day 3 reversal thesis. We've got the inside day, so we're looking for an explosive move outside of the range of the inside day. Not only that, was also a bullish close on Friday after a series of bear closes. So that's setting us up to look for longs as well in continuation with Friday's intention to move higher. So in the absence of bears, then the bulls can take over. And if we get a pullback in yields, that would be the icing on the cake. And we're getting a pump up before the New York Open. So pumps are usually met with dumps. So that also is playing into our favor. The bullish thesis anyhow. Okay, so basically that's what I have to say for the moment. I think there are, so to wrap it up, there seem to be opportunities in going long, short yen. So finding the best pair to do that with, looking for the best pair, being patient, waiting out. I mean, dollar yen, the yen is firming up against the dollar because the dollar is selling off. So looking for the continuation of dollar yen may not be as fruitful if the dollar continues to sell off. If we do get a pullback, then perhaps it will be in euro yen or sterling yen. Yes, yes, it is because of the interest rate differentials. Inflation data came out from Japan, and it wasn't particularly well. Basically, underscores that the Bank of Japan is um, dovish for longer. The commodity currencies we can look at inside day for Aussie on Friday. Are we going to tap either side of that inside day, high or low? Bias to the upside on dollar weakness. If today closes positive, that will be bullish for the week ahead. So the yellow bars, by the way, represent inside day. Canadian dollar, day two of a 3 day cycle. These are the squiggles we wrote prior to the open, and the currency has gone to exactly where we thought it would. So it's dropped out on a day two continuation. Day day one was Friday when it tested. Well, Friday's highs failed, and we're dropping away. So again, dollar weakness fueling that sell-off. Target is being met pretty much. There's my magnet. There it is. Almost. So here it is down here. 134.95. So we're getting a breakout here. Um, Perhaps we'll get a pullback and then a continuation to the downside. Any pairs in particular, guys, that you would like me to go through? Euro dollar. Essentially, euro dollar is the opposite to the Dixie. So euro dollar breaking out. It's broken structure over here. Right, so it's building a bullish case. Um, we are now officially on the backside of the bearish trend. So I'd be looking for opportunities to buy low. Not sure that chasing the move would be the most fruitful. Um, I've been wired to expect when you see a breakout like that and a pump up ahead of the Wall Street Open, the Wall Street Open will give you the reversal. Um, Ideally, if my thesis is going to be bullish and I want to be buying the euro in and around the Wall Street Open, I would have preferred the move lower ahead of the open. I mean, we've still got plenty of time until the open. I mean, it's only 7 o'clock, 8 o'clock New York. So we'd like to see a pullback. Maybe we'll get that now. We've got 5 minutes to the end of this bar on the hourly chart. I'd like to see the pullback and then the Wall Street Open be the around 9 o'clock, 9:30, 10 to give us the opportunity to take this long. Yeah, well, yes, that's what we're hoping for. We're looking for the pullback before the Wall Street Open. No problem. If we get the pullback before the Wall Street Open, then the Wall Street Open would be a decent place to be looking for a continuation to the upside. US oil, short. A pullback until the point of, let me just So when I'm looking for a pullback, I would like a pullback to be at least a 38.2. So let's do it on the 4 hour. A 38.2 Fibonacci retracement is ideal, or lower. Too much lower, below the 78.6, then I'd be concerned that we're not heading higher. But to at least where we have support structure. So on this 4 hour chart, we've got this W formation, pull back into the neckline, and a continuation would be excellent. Then essentially wherever there is structure, so even at the 38.2, up in here would be okay. So pull back and a continuation. So if that happened over the 15-minute chart, for instance, it might look something like that. Right, so pulling back into Wall Street and then the move to the upside would be ideal. So when I say pullback, we're looking for pullbacks into support structure. If the well, I would look to how high. Sorry, how high could it go? Well, if we go to the US dollar, we can start marking out areas of potential support. Essentially, old lows, noting that there'll be on the adjacent side of the Dixie, i.e., the currency basket. But if you look to these lows, these will be areas of interest where on the other currencies the market will likely target, if that makes sense. So keeping an eye on the Dixie is important in that respect. So if the Dixie can fall 103, take out 103, get into the 102.90s, you've got a 60-point daily ATR on the Dixie. So the range today so far has been half of that. So we could get a range expansion. Feasible, we can get into the 80s, we can target down here. Last week's highs, lows rather, sorry. But on a Monday, how likely is that? Not sure really. I mean, why not? But Mondays tend to be less active. But considering it's set up, for instance, on day threes, day twos, these tend to be explosive days within the 3 day cycle. So we could see relatively large movement or average movement despite being a Monday. So then on the euro, um, the euro dollar is a first green day, like gold. So on Friday it closed green. So that was the bias for a move up. We got that peak formation. What we didn't get, unfortunately, is what I was talking about, was the move lower before the move up. So this is a continuation trade. So they're a bit more difficult for me to navigate because you're always chasing the move. But if you can get a pullback, then that's preferable. Now, how high could it go? Well, if we go out to a, so if we do get that move I was talking about in the dollar just a moment again, then this could easily shoot a lot higher. I like to target round numbers, so 109.50, and then the quarter level. So if we look at the range from swing point to swing point, from up there to down here. So we're in level 1 of that range. We want to get up into level 3. The daily ATR is 72 pips. Okay, so what's the range been today so far? Just looking at a 4-hour chart to measure it. So we've been down to here, up to here. We've done 52 pips, so 70 pips takes us into level 2. And while we're up there, we might as well be targeting 109.50 and the highs of last Monday. So last week's highs, reasonable area to target. And that would be extending the daily range by some margin. But, we don't have to stick to the daily range. I mean, it could come in lower or higher than the daily range. It's just an estimate, just a guide, really. Over the last 21 days, the average pips this market's moved, this asset, euro, has been around about 72 pips. So at this point here, I'd be saying, well, look, my target's going to be slightly above last week's highs, because there's probably money resting above there. The short squeeze is being put on already. We could get an explosive move above the double tops here, above here. So targeting into here initially in the 109.20s, the 109.30s, 109.50s, and 109.70s. So just noting what's happened here, it's quite interesting, isn't it? So we've got the peak formation, stop hunt, taking out liquidity, coiling, explosive move. Got the pin bars here, the engulfment, another pin bar, and engulfment, impulsive movements here, pin bar, engulfment, rally, a lot of momentum in that move. Is it going to pull back? Maybe not. Maybe it's just going to continue on up. Would like to have been involved in this on this breakout, this candle here, or even this one. Stop below for a day trade. But unfortunately, I was tucked up in bed, and you can't be there for them all. But let's see if we don't get a pullback and our opportunity to get on the train and ride it higher. Do you see a case for 108.30 to the downside? I'm afraid until we break structure, so until we get below 108.70, I can't build a thesis at the moment for the downside. Okay, and sorry, I was asked to look at oil. Oil, you could argue a case for lower, Is this a topping formation? Perhaps. Um, See, in this leg here, we broke the higher low that was put in before the higher high within this bull cycle. So this bull cycle is starting to unwind, technically. So you've got that low there that was broken here. That bearish move. Now we've come back in, which is typical. 80% of breakouts fail. So we're moving back inside. And the next resistance area could be here. So perhaps we're going to move up into that for a test before rolling over and coming lower. So on the daily chart, if you look at the video that I put for you guys in the education section, this would be a potentially good prospect for a swing trade to the downside. So the rules there are similar to what we talked about on the hourly chart for a day trade. So you want the 38.2, check. This has come up as far as the 61.8. It's come up and tested this bar's lows here as well. Currently acting as resistance. So maybe we could come up higher. Perhaps we're going to close today as a doji. Maybe not. There's plenty of time to go. This can quite easily move on up. But regardless, what we're now looking for is this correction and continuation to the downside. So at that point, you go down to the 4-hour chart. When you start to see this decelerate, and you can use the EMA. So we've had the cross up, the 10 up through the 20. Now you're looking for the 10 back below the 20, and then you want the MACD in bearish territory, so below the 0 line, and then essentially you're measuring the correction. So let's say this is as far up as the correction is going to go. You measure the high of the correction to the low, and you target the -272. And if that lines up with structure, which it does, so that would be a reasonable target to go for. Where is it? Down here. All right, so 78.25, and then below there, you've got the -618 lining up with these highs over there as a target further down. So what you're looking for now is when you get the triggers, the EMA crossover and the MACD, you're looking for the price to have broken structure, and that's where you're looking to enter. So that's from a swing trading perspective. Let's clean up the chart entirely and look at what's on for today. So as I said, we've got an area up here that could be targeted. Maybe a move up. We've got the various lows on those bars. I'm going to move to the height of that cluster. In there, here. So those are all pretty decent levels to be looking for if you're a bull. But just bear in mind that we are starting to break down structure to the downside. We have reacted to this support area, but it may prove to be a weak low. And as I said, with that thesis coming up to come down. But while we're front side of the bullish trend so far, and bulls are in control, and as I said, we could be moving higher. Just trying to see anything on the, if we've got anything on the 3-day count. So we had day 1, day 2, day 3. Seems to be a day 3. Well, this could go either way. It could be a day 3 continuation to sell high and perhaps finish low on the day. So maybe we're coming up to come down, and perhaps we'll get an explosive move in New York to the downside. So maybe we're getting a pump up, and that's setting us up for a New York trade to come into the downside. Because we've got here, look how many sessions. If you look at the sessions, Asia came up, we came down in London, we're coming up in New York. Perhaps we're going to get the long squeeze where longs are in the money, so that's where we could be targeting. So move up to come down. So just going to monitor this. We've still got plenty of time until the Wall Street Open. And also oil tends to be a mover after the Wall Street Open. So 10 o'clock New York, within that window, 9:30, 10:30, 11, you can often see the explosive moves occur. If you go back and do your homework on the charts and have a look at that. So let's see if we don't just continue to set up for the explosive move to the downside. I'd like to see a bit more of a move higher here, but we could be topping out. It's on the hourly chart. Pump up, move down. Right, so in that regard, we've already broken structure. So that could be the peak formation of the day, maybe not. Let's pull this out. So we're still arguably front side of the bullish trend. We could continue higher. I mean, the 5-minute, let's go to a 1-minute. Technically speaking, the higher low is here. And we're still on the front side, therefore, of the bullish trend. Having said that, we've broken out of this cluster, we've pulled back. I personally would be reluctant to be shorting this at this stage. I think there's a bit too much support structure in here. I'll be inclined to wait it out and let it run by me. If it sells off, it sells off. I would rather, if this support structure down here was say higher up, right? And if we've broken that, then fine. But we haven't. It's down here. So I think this is support. This is support, and I think we can carry on up and perhaps make a higher peak formation, and then be looking for the slide. And maybe that would align with Wall Street. Okay, yeah. I mean, it would do no harm to put on a tester, and what I would use as a prop would be my EMAs. So the thesis is therefore we've had change of character in the market. We've come up into the peak formation. We're finding resistance. We've broken, well, we haven't broken structure down here. You could say that we've broken this structure, so that's check one. We've dropped, pulled back, check two. We've got resistance in the volume trap, so this is trapped volumes. That's the thesis. That's the thesis that this is trapped volume, and the market's going to run away from that. The downside, we're going to need on the 1 minute. This is the 1 minute chart, so I'm just looking for entry criteria, and then we could have a pop at targeting the lows. And if you've got your stop in an area where, if you're wrong, and you can go in small. So in this scenario, we'd be looking to stay on the front side. So the market needs to stay on the front side of this bearish trend. Okay, so while all this price activity is occurring, all this mumble jumble here, if you get an engulfment that breaks this low, an engulfment to the downside that breaks this low, you've got all these pins, and then an engulfment, that is bearish structure. And that is a market that's trying to pull away from this trapped volume up high, right, within a bearish environment. And if you can time it, if it times well with, say, a new 15-minute candle, so just wait it out. We've got 5 minutes, and if what we're looking for, so an engulfment of that, all this cluster on the 1 minute chart to the downside, occurs at the turn of a new 15-minute candle, then that new 15-minute candle is likely to give you enough momentum to the downside, if you're getting signs on the 1 minute chart that that's the intended direction, with a strong engulfment of all of this crap, essential consolidation, backed up with these pins on the front side of the bearish trend. So we're looking for an engulfment, just to draw that on to engulfment that engulfs all of this rubbish. And if that occurs at the turn of a new 15-minute candle, then with a stop above, then that 15-minute, that new opening can often give you the momentum, at least to take some money off the table and get your position into break even. If it starts breaking, I mean, if you break down this support structure here within that move over a number of candles, 1 minute candles, then that'll be a healthy sign, and you'll be able to move your stop loss to a break even. And if it sells off, great. You've caught the move early, and if it doesn't, it moves up, stops you out, and then comes up and starts breaking this, then we've got in too soon. But that's trading. You've got to take some of these things on the chin and maybe take a loss or two on the way until you get the real move, which can be five times your risk, and make up for your little losses along the way. And then you add into that once you've got confirmation and it's a dead cert pretty much, then you can go all in. So that's what I'd look for. But this price action now is starting to confirm our bullish thesis that these aren't the highs yet, and we're going to get a trade later in the day higher up, perhaps. So we'll just keep it. We'll keep it on the watch list. Right, any other pairs you guys want me to look at? If not, we'll close it down. Gold's extending on that rally out of congestion. Are we getting the pullbacks in the yen? Right, could be. Right, so we might start to see this pullback that we're looking for. So we're looking for a 38.2 correction for the continuation up. Something like that on sterling yen. US 30. US 30 is a day 3 correction to the upside. Talked about in yesterday's video, and it's starting to play out. Again, this opportunity would be best taken around the Wall Street Open. What we want to see is a drop and then the move up. So hopefully we're going to get that. We might be coiling here to shoot higher. Peak formation, coil, breaking out, coil, continuation. Or we could have the pullback and then continuation. Or it can just go sideways, unlikely. Or it's going to drop lower, catch everyone off guard. All the bulls that are in anticipation of the move up is the obvious alternative thesis. But maybe we won't get fireworks. Maybe we'll just have a higher close, and that would be a first green day for a Tuesday continuation to the upside. So it looks like, you see, so we've got prospects of closing higher on the day. And these indices, this S&P is breaking to the backside of that bear trend now. So we can use that as a guide for both the NASDAQ and US 30. US 30 is breaking to the backside as well. And so is the NASDAQ. So bullish. Silver is likely to go where gold is going. So there's no surprise that it's shot up. Something that we've been calling These are all old technical analysis talking about the move up, which is what we're seeing. So no surprises there. Weaker dollar, stronger precious metals. It's come up into resistance. Maybe we're going to get the sell-off. We'll get a sell-off, maybe holding in support. If you're going to short this, counter trend it, then beware of that support area over here. Certainly if the bias remains to the upside, so pull back, maybe you'll get a scalp to the downside before we move up. Yeah, okay. So if you're long already, then just note that you're up in resistance. That this US dollar over time has not been has proven to be resilient even at times of stress. So just be wary that it can come up, and that would be adversely affecting gold and silver. But what we do have in our favour, looking for longs in gold and silver, is that the yields have already been pumped up. So maybe they're going to be falling away, which would drag the dollar with it, and that would be highly beneficial to our bullish gold and XAG thesis to the upside. So perhaps we get a shallow correction and a continuation. Or maybe you're just going to get the burst higher. If yields fall away, then that can shoot. And then I'll be looking for levels on the upside to target. This is where the 3-day cycle template comes in. Take off all this mess. Right, what's the ATR on this? Right, so you're already roughly at the ATR. Well, yeah, you're already at the ATR, but there's nothing to say that this can't continue going higher. But it may take an extreme drop in yields in the dollar for that to really pick up a substantial amount of momentum. Any other questions, guys? You're welcome. You're welcome. Okay. All right, guys, we'll call it a day. Good luck out there, and we'll touch base again at the end of the day with a wrap up and an outlook for tomorrow. But hopefully, this has been helpful, and you found yesterday's watch list helpful, and it's all played out very well so far. And we just want our opportunities to come to fruition in the US session. Okay, guys, have a good one.